Hey traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex forecast for the week starting 4 until the 9th of November 2018. Previous week turned to be a wonderful week, and we will discuss about it in a minute, and it looks like the market is preparing to us great opportunities, so a lot to cover today. First of all, as always, thank you very much for your time watching this video. I hope my ideas help your trading and give you some interesting thoughts for the coming week. Hopefully help to your trading. If you enjoyed the video, please show your support back. Hit the like button below the video. Drop some feedback below in the comment section. Your support, my motivation, not a secret. That's a simple motto. I do that for you, and hopefully it helps. Before we begin, two important notes. First of all, if you are not with us yet, below the video in the comment section and also in the description, you would find invitation link to our totally free Telegram channel where we post ideas, strategies, articles, videos for you and your trading journey. So basically it's a free channel to give back to the community and hopefully to help your trading. So the link to join us is right below. The second thing is, on Monday I will be publishing the weekly forecast PDF format, the same we do every single week. So come back on Monday to this video, and below the video in the description section and also in the comment section you will see the PDF format right there on the video. Now this is how it looks like. Of course, if you are following the newsletter, so just watch out for the email, because I will be also emailing the format, the PDF. We do that so the things are basically simple for you. Everything is of course free, no charge, so just it's from us to the community. Hopefully it helps. As every single week, what we do is we go over the previous week reviews, see what worked, what failed, and what basically is still relevant and what is not relevant, so making a clear follow-up of our trading. The reason I do that this way is not just to predict what's going to happen on the coming week. That's not my goal. I just want to show my followers, the traders, how trading flow looks like, because the market conditions always change. When you are bullish, you know, it's too easy to marry this idea and look only for the buys, but sometimes it becomes wrong. Same with the bearish. So you need to be able to adjust, get these validations, get the invalidations, what invalidates your setup, what validates your setup. And I want to show you how that basically happens in a swing trading, because most of traders believe that the only way to trade is intraday, right here, right now, and that's a complete mistake. And my goal is to show how successful trading is also done week after week, week after week, week after week for the longer run. When you have a clear plan, clear vision, and clear follow-up, it's basically the same idea, to trade and to follow your setups, what validates it and what invalidates it. So what we will be going now is exactly over that. It was the non-farm payrolls week, so it started very tricky and slow. It turned out to be much better on the second part, much more volatile, and the numbers that came from the non-farm payrolls were amazing numbers, which means this week could be also volatile and interesting. So let's begin. The first one, as always, we have on the list is the euro versus the dollar. Our idea was to get the sell after some rallies, right? Let's take a look on the chart and see how that worked for us. Well, that was our place. We got the move down. Actually, I was expecting it to be higher, to be honest, but it never happened. So we got a move down, and this move down, look what happens, creates now a false break, and also now builds up the principle of the higher highs for the euro dollar. Now let's take a look on the weekly and again start to understand what is happening. So the euro dollar has now the structure of two waves on the weekly chart. The ideal level for the reverse would be, of course, here around the 111, 110, maybe slightly lower. That would be the ideal level for the reversal. However, the daily already has two wave cycle by itself and a bullish divergence, meaning we at least can be exposed to some kind of a corrective cycle. If the double cycle comes from the daily chart, the corrective cycle to happen on the lower time frame, we go to the 4-hour chart, and corrective cycle could happen in one of the two variations, ranging structure or two waves. So basically this is what we expect right now, 1 and 2, before possible further move down towards the 111, 110, or simply any kind of ranging pattern here before the bears will take the control again. So the idea here on the short term, we can start looking for possible rallies with the bullish setup, and once this rally turns off with some bearish divergence, this would be the time to start looking to sell again. Now this is the plan for the euro dollar. In validation to that setup, basically if we not just break but close below this area and hold it, because if it doesn't hold, it can easily turn to be a false break and keep moving in the range, right? So that's definitely a possibility, but if it breaks and holds below, game is over. We are aiming the 111, 110. The next one on the list is the euro versus the pound, and our idea worked pretty much perfectly here. That was the place where we expected it to happen, and this worked pretty much by the book. Was a good call, was a good opportunity. This was the clearance area where we wanted to see that breaking, and since then the trend line breakout and the ride all the way down. So what do I expect from this pair? As exactly as it was on the previous week, sell the rallies. Invalidation would be right here. So as long as it's below, we should be looking for seller rallies opportunities. That's my view for this week as well. Aussie versus the franc, we wanted to see a new high making a false break. That's the idea, or alternatively breaking this trend line and starting the move down. Let's take a look how this one worked. Here we are. So we are now in a new high. We never got this trend line broken. We never got a false break yet. So the question is, what's from here? My view still remains bearish here, at least for some short term. Invalidation for that plan would be basically this trend line, because if that breaks, that means we are possibly moving here. If you take a look, we have this kind of a structure of a possible ranging here that could change, but meanwhile my view remains bearish. And let's take a look on a daily current scenario, and what the daily does for us is very simple. Here we are now sitting on the 100, and we have the 161.8 slightly higher. So the daily is making a double cycle. Now, in order for that to be a valid cycle, each of the legs has to be cycled by itself. The first leg is a cycle by itself, pretty clear. The second leg is not yet a cycle. So we would want to see that making some kind of a push like that with a false break. So breaking above this high, returning down to make a false breakout, and from there start looking for possible sells. And that could happen around the 100 or simply slightly higher around the 161.8 before we are aiming for the sell. So the 4-hour chart has to complete itself. Once it does, this is our place to start looking for the sells. An alternative, if the 4-hour chart does not become a cycle, the alternative is still the trend line. So if we manage to break that, then the sell the rallies would be as long as the trend line holds. So I can say this is the clearest opportunity now, and this is the best. Definitely fair enough to watch. Not sure it will be valid and tradable in the coming week. Maybe yes, still early to judge. But definitely interesting one to follow for the next several weeks and watch for clear setups. Since the weekly, daily and 4-hour involved here, it might take time. It's not just an intraday opportunity. Next one on the list was the pound versus the Kiwi. We wanted to see the clearance area reached here and making the reversal. So here we are. We got the level, right? We cleaned the level here, the one that we wanted to see. Now the pair has the structure of possible reversal after the two wave pushes, and we might start looking here for possible reversals. So a double bottom, a false break with bullish divergence would be definitely the opportunities for us to look for short-term possible buys before it switches bearish again. And the reason for the bearish again is basically because of the weekly cycle. We expect daily two-wave corrective structure. So for us, the plan is sell the rallies. On the short term, if we will get here the false breaks with bullish divergence, we can start talking about short-term rallies, which we will want to sell them. If we don't get a false break and simply rally, no problem, then we are looking for two-wave structure and sell on the pound versus the Kiwi. The great levels for the sells would be here, this consolidation area, and slightly higher around the 199. That would be the places to look for bearish setups, for sell setups. Okay, that's for the pound versus the Kiwi. Now let's continue. New Zealandian dollar, that was our plan to get the corrective cycle happening. And well, one of the plans, because the other plan was to get a false break here with a possible new low around 0.62. It's still a destination for the longer target, but the current scenario that the New Zealand dollar is developing is basically the two waves correction, which is more than okay, and I will explain why. Because the weekly current divergence is bullish, meaning the daily has to be the corrective cycle. Or could be corrective cycle. Corrective cycle could be in one of the two options, two-wave retrace or a range. For a range, we need false breaks, and we have false breaks. We almost even got a new one, right? So we have the false breaks. So what could happen here is basically simply movement like that before the sell continuation. On the other view, two-wave correction is also, of course, possible, and that could be what is happening right now. So the daily has to be corrective cycle, and daily building it up. In order for the daily to be confirmed as a corrective cycle, 4-hour chart has to be cycled by itself on each of the legs. So while the first leg of the daily is a cycle by itself ending with divergence, the second one still pushing and there is no divergence. So the New Zealand dollar is expected to continue slightly higher. On the short-term view, maybe to break this high or the next high, that's pretty much above 0.67, maybe even 0.6750, where from we can discuss later for possible sells. Meanwhile, for the short term and for the beginning of the week, the New Zealand dollar is buy retraces. And the euro versus the Kiwi, we are after sell the rallies. That was and remains the plan. Now for the euro Kiwi, to be honest, that was the place I was expecting a little deeper bounce right here. The 261.8, this is the level also we had on the previous week right here. I expected a bit deeper correction. It turned to be very small one, which proves the strength of the bears and pretty big time here. So what is happening right now is that the euro Kiwi very likely developing a cycle like that. So triple double breakout, and now is building up the next cycle. That could be something like that. So if we measure it this way, like a triple double, we figure out that the full duplication isn't too far away. That's around the 170, where we might get some fighting zone for correction, which again I will expect to sell later, or we are going expanded towards the area of 166, but then this level will have to be cleared. This or other way around, we will have to sell the rallies. And these short rallies can happen from this zone, which we will be looking to sell them. They can happen from here, which we'll be looking to sell them. This or other way around, sell the rallies. From here, it's possible to look for these short-term bounces, but two things have to happen here. 4-hour chart has to complete divergence with a cycle, so it has to be something like that. 1, 2, 3, right? And 1-hour chart would have to be a cycle by itself on that leg. So 1-hour chart would also have to be here with a false break, then higher highs, and then possible short-term retraces before the further sell. The safest zone for the Euro Kiwi is to sell the rallies for the longer term. So this is what we, where is that? I didn't draw it. Well, basically this is the weekly cycle, so this is what we expect, 1 and 2. Okay, so sell the rallies here would be again the correct plan. Aussie versus the dollar, we were waiting for the one of the scenarios here. Basically convergence to form or a new low to be created for our buys. What we got was the convergence idea, and I will explain. Here we got a false break and this high is broken. We are now in buy mode as long as the last low holds. This is the invalidation now. We would expect 2 waves correction or a range. So we have the false breaks. What could happen here is also a ranging correction. It doesn't change anything of our plan, because our plan right now is as long as the invalidation low right here holds, we are after buys. So we drop to the 4-hour chart. It has nothing against us, meaning we are after the bullish setup. This is the invalidation. Alright, that's for the Aussie versus the dollar. New Zealand franc, we were looking to get the 100 zone to hold, break the trend line and continue lower, or 161.8. At that case, we are reaching right now 161.8, and it's right here. It starts to be slightly suspicious, but it's still holding. Now, it's a structure of a possible triple cycle by itself here, or double extended, no problem. The idea here is 4-hour chart has to fit in the daily, and once the divergence would come here on the 4-hour chart as well, this would be a possible sell opportunity. Okay, so our plan was to remain sell the rallies. We reached the level. Now we need to find a turnaround structure, and that happens by normally by false breaks or double top and lower lows, or at least lower low structure to start, and then we sell the rallies. Now dollar versus the yen, I was expecting it to continue to 111 or 110. This idea failed, never worked out, and basically what happened was here. That's what I was expecting for continuation, right? Never happened. We never got this low, so we never got this buy opportunity. The sell opportunity failed. Now, to be honest, I have no clear idea over the dollar yen for one reason, because the current move, right, is one straight leg to the 61.8, and it's holding, because if it's broken, we might be going to 115, 116. If it's holding, making some false break, we might begin the deeper correction. So at this stage, I don't really have anything clear here. It's a bit suspicious. 1-hour chart currently doesn't really clean the table for doubts. Really not sure what to expect from this pair, so I move that as neutral right now, and wait for clearer opportunities. This one didn't work out, and if you remember on the previous week, I told you that non-farm payrolls week tend to be more bullish to the yen pairs than bearish. Here we go. It's a proof. And once again, these statistics normally around 70% of the times work. And if you get bullish setups, which I was expecting this for buys, never happened, but if you get bullish setups, non-farm payrolls week tend to work well for that. Next one is the dollar versus the franc. Our plan was to remain sell. We got it slightly higher around the, so not here, it didn't hold out. We now have a false break. So basically, I do expect the 101, 102 still to be bearish. The reason for that is very simple. Weekly is a potential divergence. Daily is a divergence, and the structure of 2 cycles. 4-hour chart did not have yet any lower lows. So basically what could happen here is a continuation like that, or slightly higher, which would be my preferred scenario. Something like that. That would be my preferred scenario to trade it. Not sure it will be the case because the 1 hour chart already have 2 false breaks and here 1, 2 and the convergence structure. There is a possibility that we will be exposed to something like that. As I said, I prefer to get one more false break on the 4 hour chart with the next divergence and then get my sells. Not quite sure it will happen, so we will follow the beginning of the week. We need 2 waves. It could be false break on the 4 hour chart with the turnaround and sell, or 2 waves on the 1 hour chart with the reversal and trendline breakout for a sell. But my view is sell the rallies. CAD franc, it was for buys. We never got this new low, and honestly the scenario right now isn't clear. So I remain bullish in my view. I do expect that to continue higher, and that could be from here or slightly lower for the buys. So my view, watch for bullish setups. Can't say we have anything clear right now because we don't. We are stuck in a range here, kind of not here, not here. So I need something clearer here for this pair. Definitely not the clearest one to watch for the beginning of the week. And the pound versus the franc, which we wanted to see for buys, created the false break, made the breakout, make the trendline breakout, and here we are flying. So the biggest question is what's next. Honestly, I remain bullish in my mind. I think we are going higher. This would be the invalidation. So drops are still to buy. If this is invalidated, we will have to revalue the weekly cycle. Meanwhile, I still expect for bullish continuation. And before we go to indices and that, we have also few of the other pairs. Aussie versus the Kiwi. Our plan was and remains bullish, so I still expect it for rally. It might get one more false break here with bullish divergence to us, no problem for that. So this is what we have. We drop the cycle, right? 61.8 currently holding it and could turn around. If not, then the 100%. Watch for buy setups here. The way to do that is very simple. Daily is the double cycle. 4 hour chart has to be the cycle by itself. So the 4 hour chart has to create a bullish divergence here for buys. And if it doesn't create it here, then it has slightly lower, right, as we discussed. And the divergence has to be here. So once the daily becomes synchronized with the 4 hour chart, this is our time to look for the bullish pressure. Okay, so pretty simple here. And once you have this clear plan in front of your eyes and your head, you know what to follow. If that happens, you trade it. If it doesn't happen, you don't. Very simple. And that's how important it is to prepare the plan. Kiwi versus the Canadian, we are after buys. We were after buys. We're still after buys. Here is the Kiwi versus the Canadian, going pretty well, and I still think it has the room. So I am yet bullish on the Kiwi versus the CAD. And now for the indices and the commodities. Sugar, our plan was get the correction and the buy. 4 hour chart, daily starts to form the bullish hidden divergence, so we expect that bullish continuation. 4 hour chart doesn't really provide a confirmation, so by ideal, that's what's to happen. 4 hour chart to form divergence and to go buys. That's for sugar. Natural gas. Natural gas, here we are. Idea was the same, get the bullish sign, right, and go for buys. That's a bullish hidden divergence. 4 hour chart, bullish divergence by itself. So basically our plan was and remains still buys. DAX, we are good for short-term correction, and that's pretty much what's happening right now. This is the first leg in play. We might get a second one. right? Once we get this scenario completed with the divergence, we are after attack the sells. Same with the NASDAQ and the Dow Jones. Well, we don't have here the corrective. Okay, I'll show it here, the corrective here. Daily is the bullish divergence, might become bearish hidden divergence if the MACD creates new high. For that to happen, 4-hour chart should provide something like that, right? Some divergence, and then we are to attack the sells again. Monthly completed to be a monster candle, so for us it is a corrective cycle in the weekly mode, so we would expect this. Same with the Dow Jones. I'm not going to cover that because it's pretty much the same idea exactly. And gold. Now gold, we expected to hold the 100 or approach to the 161.8. So as for now, the 100 is still holding, but we never got the trendline breakout. Right, this is the trendline breakout as we wanted to see, and we never got it. So to say we have a continuation, it's not true yet. We can still see that dancing towards the 161.8 for sell, or on the same time block here with a divergence and make the turnaround. Which will happen, I don't know. We do need to see the level from the daily holding, and the 4-hour chart must fit in with a turnaround, and it doesn't have anything like that right now. One straight leg, completely unclear. So I would say that for me the gold is still sell. The rally is really not clear for the beginning of the week. And okay, pound versus the Aussie was another pair we covered the previous week. Here our plan was like the pound versus the Kiwi to clean this area. We did, so we would expect the corrective cycle before the sell. This scenario or this scenario to follow. Sell the rallies is the plan for this pair anyway. So that's the follow-up from the previous week. Now I want to show something interesting as a new opportunity. We have the oil. Where is my double? Here we go. The oil completed this weekly cycle, now making lower lows, convergence. The idea here is that's our critical area where we would expect some possible turnarounds and possible future sells. So sell the rallies for the oil is the new add-on. One more, where is that? Where is my pair? Oh, here. The euro versus the yen also starts to be an interesting opportunity from my point of view. Last pressure from the weekly is still bearish hidden divergence. Daily is the bullish divergence, so contrary to the weekly, meaning we are after corrective cycle, meaning that once this is completed, this could be a very nice opportunity to start looking for possible sells. So what we do is we drop here the Fibonacci's. We have a level here and here, so we need to make sure where we got our magnet of the previous drop down, and the classical area is right here. If we can get closer to 130, 130, 50, this would be the time and the place to start looking for the sells. So this zone is the place where we do want to look for sell setups. Okay, and that's pretty much all. That's the opportunities as they are. Pound dollar, not too clear to me at this stage. I prefer to stick to other pairs. As simple as that. As simple as that. So cryptocurrencies, there is nothing happening right now. So it's currently not worth to watch that for the short term. For investors, different story. My view is it works for the invest, but it's not for the weekly forecast. It's more like for a few years forecast. So that's basically all. I would like to first of all thank you for watching this video. Second, if you are not yet with us, I invite you to join our live trading rooms. So to get our trading setups every single day in the live trading rooms and in the trading reports. To join us, and below the video you have the invitation to the Traders Academy Club, and I hope to see you inside. So thank you very much for your time watching this video. I wish you a wonderful trading week. I hope my video helped you. If you did enjoy, hit the like button, drop some feedback below. Your feedback, my motivation, it's my motto. It's very, very, very true. And enjoy your weekend. I wish you a wonderful trading week, and I'll see you in the live trading rooms in the Traders Academy Club. Thank you. Yours, Vladimir Ribakov, Traders Academy Club. Bye for now.